Well, as we mentioned, oil prices on the rise once again today. Crude, in fact, hit a 29-month high in intraday trading as the violence in Libya continues to escalate. Well, our next guest predicts higher oil prices will have a negative impact on M&A activity. Frank Aquila is a partner in the mergers and acquisitions group of Sullivan Cromwell. He was named Dealmaker of the Year by the American Lawyer back in 2009, and he's a frequent guest here on Bloomberg. We're glad to have you back, Frank, as always. So I guess the question is how and when oil prices will affect the M&A market.
Well, I think you step back, and as you've been talking about a lot, not only today but in prior shows, the increase in oil prices affects the overall economy, and that's what really has the biggest effect on M&A activity. Right now we're in a modest recovery. We saw some good jobs numbers on Friday, and that's the basis on which companies are looking at doing acquisitions. The problem becomes as the oil prices rise and you have economic growth slowing at a point in time when you don't need economic growth to slow, that's when boards and management teams start to pull back from transactions.
Now, when you were on earlier this year, we talked a little bit about 2011 being a good year for M&A, and a lot of that had to do with cash on balance sheets. I mean, the price of oil rising doesn't affect the amount of cash that these companies have on hand. Do they just want to hold on to it in the event that there is a slowdown? Because they do have the money to do the deals.
They certainly have the money to do the deals, and to the extent that they need to borrow, they can borrow at almost historically low interest rates. So the cost of doing a deal is low. The problem is not about the wherewithal to do the deal. It's really what they're betting on in terms of the future. And if you think the economy is going to grow 2, 3, 4%, you're willing to pay a certain amount for a strategic asset. On the other hand, if you think the economy is going to start to slow down and become stagnant, you're not willing to pay as much. I think also there's a psychological aspect to M&A. If people are feeling good about their business, good about the economy generally, good about the world, they're going to be more optimistic, and they're going to be more likely to commit to a major multi-billion-dollar transaction.
When you say people, you mean executives?
Well, anybody, but yes, of course, the decision makers in companies are going to be more reticent in a situation where there's greater uncertainty.
Let me ask you, we keep talking about the effect that rising oil prices have in terms of economic output, but there is a real fear sort of political instability and what we see in the Middle East and North Africa perhaps spreading to regions like China. I mean, many people say that's unlikely, but does it also mean that global M&A could see a marked slowdown as companies here in the U.S. that are rich with cash worry about what's happening overseas?
You touched on a very good point, Lisa. This is not really just a U.S. phenomena. We're very much in a global economy. Certainly the price of a barrel of oil is the same here as it is elsewhere, so it's going to have the same effect. But you're right. To the extent that there's political uncertainty, it's a little bit like what we saw last year with Greece. People first started becoming concerned about Greece, but then they said, well, what's the impact going to be on Ireland, Portugal, Spain, Italy? And as a consequence, that uncertainty made people delay economic decisions. And that's really what we're talking about, is not that they won't ever do the deal, but rather that it will take them longer to do the transaction. And so therefore, some of the activity we had expected this year may be pushed into later periods.
Frank, quickly, we got about 30 seconds here. Which sectors will feel the impact first, and will it happen this year?
In terms of, I think, areas like consumer goods, certainly retailing, potentially energy, real estate, those areas that have been directly hit by the downturn in the economy and are directly affected by higher oil prices will, in fact, be the ones that are less likely to have M&A transactions. Healthcare, financial services, they're probably going to be unaffected by what happens to the price of oil.
Right, at least for now. All right, Frank, thanks so much for joining us. Always good to have you, for giving us some insight into the M&A market. That was Frank Aquila, partner at law firm Sullivan Cromwell.